Hindalco came out with numbers and the Q3 net profit was up a robust 71% to over 2,300 crores. Consolidated revenue kind of stayed flattish, northwards of 50,000 crores. And of course, as one would expect, the conversations would be balanced out between what they've done in the quarter and what they're likely to do going ahead in calendar year 24 or FY25 as the case may be. And cost escalations, not just for Novelis, which has been the talking point all through yesterday, but also for Hindalco in their ongoing Capex. Mr. Satish Pai joins in to talk about all that and more. Mr. Pai, good having you. Thanks for taking the time out. On a flatline revenue number, this quantum of profit growth and the margin performance, is this something that you budgeted for when you started the quarter, or is it a moving piece because of the volatile world that we are living in?
So I think, to be fair, when we did the last quarter, we had predicted that our input costs would be flat in Q3 versus Q2. So what actually happened is that coal cost and carbon cost, CPC costs came down. So with costs coming down about 3.3% to be exact, that's why the margin expansion happened, because the LME sort of was more or less flattish. It just went up to 2190 versus 2160. So large part of the margin expansion happened because of input costs going down.
In some sense, and I'm first right now talking about the Indian business, and then we'll move on to global as well. You had kind of shown extremely strong buoyancy in copper business EBITDA, maybe not as much in aluminum. And you had spoken about how coal costs coming off in Q3 would aid that. Is that largely the reason? And what is the outlook, therefore, for Q4, the immediacy? I believe that's as much as can be predicted in the current environment.
So I think that, the strong performance of copper should continue, because the copper demand is good, their operations are stable. And I think that probably Q4 in copper will be better than Q3. If you look at the aluminium side, I think that the costs from Q3 to Q4 will remain flattish. I don't expect coal costs to go down any further than what they are today. So then I think, it's really going to depend on the LME. The LME is sort of flattish. So I think we are going to see a Q4 for both aluminium and copper that is more or less in line with what you saw in Q3.
Okay. So increasing competition, you don't reckon will be a problem for the copper business starting Q4? You think you'll manage it?
I think that, competition is always something we take very seriously. I think that another player coming in will have some impact on pricing. I'm quite sure of that as more supply comes in. But I think that, our strategy has been to work on our customers and to go more further downstream in copper as well. That's why we invested in copper inner groove tubes. We have gone into copper recycling. We are doing copper alloys for the railways. So I think that, over the next coming years, we will have to differentiate ourselves more to maintain our position in the market and our margins. But it's quite obvious that with competition coming in, pricing will come under pressure.
Okay, fair call. Okay, starting Q4 itself, you reckon that could happen?
I don't think it'll happen in Q4. I think it's going to happen more towards middle of next year.
Middle of next year. Okay. Now, a word on the Capex, because I mean the debottlenecking at Utkal was done. You had spoken about in the end of the last quarter about the kind of Capex 4,000 to 5,000 crores, if I'm not wrong, for the Indian business and Novelis as well. Now, my question one is, give us the details on this Capex plans, how it is moving ahead. And part two of my question, rather, more importantly, is that the belief was that consolidated net debt was going to increase in a way which would, as per analyst estimates, make your net debt to EBITDA of about 1.7 times FY25. Now, with these cost overruns as well as time overrun at Novelis's end, what happens to, one, the Capex plans, and two, the consolidated to EBITDA numbers, because the project will not give you the returns the way you would have earlier envisaged?
So a couple of things that you highlighted. So let's maybe go one by one first.
Sure.
I think that first you have to recognize that the India net debt to EBITDA is negative 0.37 now. So it's going to be continue at that level because the Indian capex requirements will be more like 5,000-6,000 crores per year going forward, and we can easily meet these requirements from the cash accruals that we have. So that's the first thing. The second thing is for Novelis, they'll finish March 31st with about 2.5 times net debt to EBITDA. And in the coming FY 25-26, that net debt to EBITDA will touch 3 because of the Bay Minette and the expanded capex. So on a console level, I think we are comfortable because the India business is nearly at zero net debt to EBITDA. Novelis net debt to EBITDA will go up. So I don't think that the console balance sheet is under any stress really. And I think that we should be fine. It's true that for Novelis, it's going to be a couple of years where we will have to be very careful to manage the cash and make sure that we have enough financing to cover the cash that's required to do these projects.
We were not, at least I wasn't able to gather the inklings from the Novelis con call. I would just love, I mean, a couple of questions there, Mr. Pai. One, the reasons for these overruns, and are these unpredictable? And is it liable to get changed as time goes by? Because it is a volatile environment.
Yeah, I think the first thing you have to recognize is that if you take the overall project, which is a greenfield project, 65% is civil and 35% is equipment and all the rest. So we have already contracted all the equipment. It's on the way to be delivered. So there's no cost escalation on the equipment side. Where the escalation happened is on the civil side because we had to change the site for some environmental reasons. Then at the new site, it turned out to be, once we did soil testing, it was more softer. So the pilings and the amount of steel required was more or less double of what we had estimated in the initial feed study. So we have now spent the last 6 months going through the details. We have had third-party firms recheck those numbers. So we are quite confident with the 4.1 billion number, and we don't think that there is going to be escalation from this number.
And not even on the timelines, because it's a significant pushback. You think that is a good timeline to work with now?
The timeline we have already said is going to take 6 months to 1 year more. So
exactly.
That has already been put in. And now, you see, the more than the timeline, it's the ramp up that will happen. So we have said 18 to 24 months for the ramp up. So again, because we have been in this business long enough, we are quite comfortable that we will meet those timelines.
Okay. As you look forth, I have a two-part question and then a final question. The two-part question is, how do you reckon Q4 turns out in light of what you've done in Q3 to costs, etc.? You've given me some inklings about margins, but overall, the kind of revenue profile, etc., that you would do in Q4 relative to what you've done right now, both India business main and split into aluminum and copper. And part two, what are the challenges, Mr. Pai, that you're seeing? Because I think on the call you said that one of the big challenges is to increase green aluminum going forward. But beyond that, because it's a year wherein it's fraught with elections across the different geographies, and therefore demand might be patchy, and the Red Sea issue is still on, geopolitical conflicts are still on. So what are the biggest challenges to you, Hein?
Okay, so let's first deal with Q4. I think for Novelis, Q3 is seasonally a low quarter, but they had a pretty good Q3. I think the Q4 will be very strong. We are guiding that the EBITDA per ton will be 525 and north of it. We are saying that the EBITDA levels will reach 500 million. So just in reference, Q3 was 434 million EBITDA with $499 per ton. So Q4 for Novelis will be quite a good progression onward from Q3. If you come to the India business, copper should do better because Q3 they did have productions were a little bit lower because of some plant shutdowns. So their production will be better. So I am expecting copper to do better in Q4 compared to Q3. The aluminium business upstream will be flattish because, as I said, LME seems to be flattish, costs seem to be flattish. So upstream business will be flat, but downstream aluminium should do much better. Downstream had a pretty rough Q3 because of the holiday season, bad product mix, but they should bounce back. And we are already seeing in the month of January and half of Feb that the downstream aluminium business will pick up. So by and large, to put it that way, consolidated Q4 normally is our strongest quarter. And we think that, Q4 will be very strong this year.
Okay. And the business outlook, and again, I'll just maybe increase my, maybe you just give me a take there firstly. How do you see business outlook?
Yeah, the business outlook, as you said, see, on one side, the supply and demand for aluminium, copper is very tight. It's not that there is too much supply going around. So what drives the prices of the commodity then more now is the geopolitical and the macro environmental issues. So as you said, we have two wars going on. There is the European economy is sort of weak, demand is weak. The Chinese economy is also not doing that great. The US is doing much better than anyone expected. So if you take this geopolitical environment, the upside is that Europe economy comes back, Chinese economy shows some strength, and the wars and all don't escalate. If that happens, you're going to see commodity prices going up because supply demand is quite tight. If any of these go the other way, if escalation happens in the Middle East, or European economies go further down, China does not come back, then the commodity prices will remain soft. So today we are at a place where commodity prices, whether it's oil, whether it's copper, whether it's aluminium, whether it's zinc, all I think are on the lower end of what they should be trading at because of this macroeconomic overhang, not because of supply and demand.
Got it. Mr. Pai, sorry, just an extension. And just to get it clear, yesterday, a large auto ancillary company spoke about how they see issues in growth in FY24 and 25, and they are diverse, right? Bharat Forge is a diverse company. They spoke about this. This morning, I was asking the same question to some of the other corporates, which also do global businesses, and they were saying that thus far, they are not seeing, I mean, Cummins, for example, that they are not seeing client conversations which are sounding skittish, at least for the first half of the current calendar. I'm just trying to understand from your view, aside of what Hindalco would do you believe growth would be patchy at best, or is it difficult to say growth could actually turn out to be good too for businesses at large?
I think at businesses at large, we are saying that demand for aluminium and copper will be quite strong next year.
Okay.
So we have no issue with on the demand side. Our worry more is on the LME pricing of aluminium and copper, especially aluminium, because it drives our results so much. So we are not worried about selling the product. We think the demand in auto, electric vehicles, green energy, housing, aerospace, all is quite robust. So we don't see any problem on the demand side. Okay. Our worries tend to be more on the commodity pricing side.
Okay. And sorry, just the last extension of that question, I promise you before I let you go. China growth numbers looking the way they are, you think larger impact on ferrous, maybe not as much on copper and aluminum?
So, no, I think that aluminium and copper also are hugely impacted by what happens in China, because half the aluminium consumed in the world and more than half the amount of copper consumed is in China. So I think that today, both aluminium and copper in China trade at higher prices than the LME prices because the demand from EV, the demand from solar has been so strong. Okay. The only sector in China that is weak is building and construction. So if the building and construction sector gets stable, then I think you're going to see aluminium and copper prices actually go upwards.
Got it. So you are hopeful without that possibility, if that happens, then actually be net positive to your current
Yes, that's an upside for us, yes.
Got it. Okay. Mr. Pai, apologies for extending this appointment a little bit, but thank you so much. Important quarter to talk to you. Much appreciate your time.
Thank you. Thank you so much.
Thank you. And viewers, thanks for tuning in.